In this tutorial video of the perfect momentum strategy, we're going to go over the entry section, which is about halfway down after the market regimes. We're going to go over this entry section. We're also going to go over this move stop section. So starting with the entry section, one of the options you can do is decide the direction of your trades, whether you want to take longs only or if you want to take shorts only. Let's see that change on the screen here. You can also take both directions at the same time, longs and shorts. So these green backgrounds are the conditions where your entry criteria can happen. So for example, in this strategy right now, I'm just doing something very simple. I have a stochastics with a buy underneath 1 and a sell above when it reaches 99. And anytime it turns green, we're going to enter a long. And anytime it turns red, we're going to exit the long. That's if we're taking a long only system. If we're taking a short only system, anytime it enters on the red for a short, it will exit on the green for the long. And then if I'm doing a both at the same time, longs and shorts, then it buys on the green, sells on the red, shorts on the red, longs on the green, and continues that pattern over and over. So that's one of the first things you can do with your entries is determining what trade directions you want to take your trades in, and you can experiment with different options. Now, one of the other things you can do is also ignore your entries for your long or for your short. So let me show you how that works on the screen. So let's actually zoom in a little more. Okay, we'll use this little area as an example here. So sometimes in momentum, it may be better to actually skip a few candles or even skip an entry. So we have it here where you can actually skip entries. So let me show that to you. So this long is now entering right here. Now if we go to the entry section and we go to long entries on it, okay, right above, here we are, ignore entries long, and we go to 1. We're going to go from this entry over to this entry. So we can completely ignore this one. And I'm not sure if you noticed, but down here on the profits, we need to check how it works. Usually when you skip a couple entries, it can help you become more profitable. Just depends on what you're trading. Same thing with ignore entry short. So what we can do now is if we want to skip an entry on the short side where our longs are exiting, we can do that also. You can see here it's skipping one every time. And you can even combine both of them together. And I don't know if you're noticing down here, but that can help you with your win rates, your profit factors. When we skip 2 entries on both, we did take less trades, but our profit factor and percent profitable and drawdown, well, our drawdown went down, but both of these went up. You can do the same thing with shorts. You can do the same thing with longs. Excuse me, both, if you're doing both at the same time. Now, if you're only doing, let's go back to our stochastic up here. Let's say you're only using it to buy, let's say you're on a long system and you're only looking for oversold levels to enter. What you can do, go back to it over, let's see, we got to go up a little bit. It is close. Okay, here we are. So yes, we can still ignore entries long. Let's wait for this to update and wait for it to calculate. Oh, we need to give it some sort of exit since we took the other stochastic off. So let me add in a stop loss and a trailing stop to take the place of the stochastic exit. So stop loss, we're going to add a trailing stop. And now we have some exits that are possible for this system. Okay. So we have here, for example, where we entered. Now let's go back to the entry section. And yes, we can skip several entries if we want to. So for that to recalculate. So there you go. Actually skipping one candle was a lot more profitable than not skipping a candle. And if we do the same thing for the short, let's try maybe 4 or 5 candles, see what happens. Yeah, probably not too much because we're using the stop loss and the trailing stop to exit, but if you were, let me show you this. If we take the stop loss off for a second, and let's go back to the stochastic exit. So we're buying underneath one when it goes to oversold level of under 1, and we're going to sell when it goes above 99. Now, if we want to skip our exits, let's go back down to our entry section over here. We'll put this back at 0 the way that it was. Put this at 0 the way that it was. Let's see what our default numbers are. Now, if we skip an exit, so now, for example, this bought here and it's selling here now. Let's skip a couple of these. Let's see if our numbers improve down here, which they usually do. Yep, there we go. Became more profitable, better profit factor, better net profit. So you can do that with your longs or shorts. If you're trading a short only system, you would just reverse it. So you could enter, you could still have delayed entry on your shorts, but you could also have your long entries now become your long exits if you're using a short system. So just to demonstrate that, okay, we're entering here on a short, and this is looking for the first green to exit. So normally would exit here. And if we delay it, it's a 2, now we're exiting over here. So that's how this entry section works. You can control the direction of your trades and also delay entries, exits for both, actually for all 3 types of systems, long, short, or both. Now, my favorite part of this strategy is actually probably the move stop, and I'm going to show you why. Okay, so now we're back to just a standard stochastic exit. We're going to buy under 1 and sell above 99. Okay, and now when we go to our move stop section, sorry, there's quite a lot of options of this. There we are. It's above the, below the entry section. Okay, so here, let's look at what's actually happening on a stochastic. If I add a stochastic to the chart to show you what's going on, we're going to add this on a 24 level. We're going to change our smooth to 1. We're going to get rid of our D line, 99, and 1. So what I'm doing now, this stochastic is now matching the stochastic we have in the strategy right now. So every time we go underneath 1, as you see here, we have an entry. Every time we go above 99, we have an exit. Now, one of the things that is I wouldn't call it a flaw, but one of the limitations of stochastics is, for example, when price is going up, you can see that a lot of times it stays overbought. And when you're in a short and price is going down, a lot of times it can stay oversold. And you actually see that if I was to lengthen the stochastic out, let's go to a longer time frame, maybe like 1,000. You see that a lot more. So let's actually zoom out on time. Okay, here's a great example. So you can see here we have a long price uptrend, but stochastic is staying near the top. It's called roofing with stochastics. And what we have done to solve this is added this move stop feature. Let me demonstrate how that works. So first we're going to add a stop loss like we normally would have, just to give us some initial risk management. So we're going to have a stop loss section. Okay, we're going to show the stop loss. We're going to use, just for an example, a 15% stop loss. Just for an example right now. Okay, we have, this is the stop loss now on the screen. So when we enter a trade, so for example, when we enter here, this is 15% underneath. And our stop loss is here as we enter new trades. So what does the move stop do? Let's check it out. When we go to the move stop section, and I use move stop, what we're going to do is we're going to cancel. So here we have a long entry and we have a long exit. What this does is this will ignore this exit, and it'll move a stop, whatever percent I have here underneath that, and then continue to look for the next exit. And when it finds that next exit, it'll move the stop underneath that. And then when it finds the next exit, it'll move the stop underneath that. And what it's essentially doing is trailing price. So let me show this to you visually so you maybe understand it and see it a little better visually. So cancel and use move stop. So now instead of exiting here, okay, that changed because we had a trade over here. This is a better example. So here we have a trade entry, and normally we would be exiting here. But what happened is we now moved the stop 10%. Let me zoom in a little closer so we get more precise. What we did is we moved the stop 10% underneath this exit right here. Tradingview tools are sometimes a little not precise when you're using on the chart, but close enough. This is 10%. And every time we have an exit, or would-be exit, we move the stop 10%. So what's happening is instead of getting roofed where we would enter here and exit here, not really have any gains, we get to follow price by moving our stop loss. You can see we got a great exit until our stop loss actually got hit. And it made our profit a lot better. We took a lot less trades. We had a better profit factor, way less drawdown. So your move stop, let's go back to that to look at it and show you the options on it. You can change any percent you want. You could make it use the close instead of the high or low of the bar candle. You could actually control this to the 100% if you wanted to. You can also use pips or ticks in addition to percent if you're trading Forex or stocks. And you don't have to use a fixed stop loss every time to move your stop. You can actually use an average true range. So instead of using fixed stop, you can select this to be anything that you want. And our performance changed a little bit. You could tweak these numbers on your own, but we could use an average true range instead of a fixed stop loss if we want to do that. And you can actually change the time frame that it's calculating from, change your parameter settings, your length of it, the multiple. The multiple is adjustable to the 100% also, just to show you that. And so these are the two move stop options. Now what we also have we can do is we have in our stop loss, we can also have an initial trailing stop. So let's look at that, for example. So here we have a strategy with 98% profit. If we use a trailing stop, let's see if we can get it to be a little more profitable. I'll show you an example of what the move stop can do. Yeah, it's actually going the wrong way. Let's try maybe a 15% trailing stop. Okay, that made it more profitable for where we started off. So with the move trailing stop now, same principle. When we have an exit that would normally take us out, our 15% trailing stop, we can actually maybe tighten up a little bit. So we can maybe move it to a 10% stop loss after our initial would-be exit. But that should help out. You can see that dramatically increase the profitability of the strategy. So what we did is we initially had a 15% trailing stop to get us initially, and then we changed the stop loss after the first exit. That would have been to 15%. So to show you that visually, here we started with stop loss here, then we started trailing at 15%, and then the trail actually got changed to 10%. And you could use pips or ticks. This is also adjustable to the 100% if you want. And if you don't want to use a fixed stop loss, you can also use your average true range as a average true range trailing stop instead of a fixed stop. And there you go on that. A little bit different results, but you can change these. You can change the time frame on it. But move stop and the ability to delay your entries with a momentum-based system greatly enhance your profitability. And this move stop, you can't find anywhere else. It's proprietary. We're the ones that are using it. I'm the one that built it for the system based on the roofing problems that I would always encounter with momentum and stochastics-based strategies. But the move stop helps us to get the uptrend or downtrend if we're in a short system by moving our stop loss. So we still have risk management, and we essentially create for ourselves a trailing stop. But we wouldn't have that trailing stop normally because we would exit on the first stochastic without it. So this ignores that first exit, and it continues to trail until we actually get exited out. So that's the move, stop, and entries section for this tutorial. Hopefully that will help you a lot with your trading and momentum strategies. It does in ours. And thanks for watching. Enjoy.